Okay. Good morning, everyone. Good morning. Uh, so a new standard for today, Ind AS 113, that deals with fair value measurement, something which is a term that you have been hearing on and off on a consistent and regular basis in your financial reporting, and something that we are finally looking at. What is this fair value measurement? What do you mean by fair value measurement? Okay. To put things in perspective, this is not a standard where you put in the inputs in the standard and the output will be the fair value. So if you are having any such expectations, let me tell you, you will end up being disappointed. What Ind AS 113 tells us is, what do you mean by fair value and what are the methods to measure it? Okay, what are the methods to value it? So that is the only thing. So this is more of a discussion on the fair value measurement approach rather than actually giving out the fair value itself. So that is the end result of this standard. So at the end of this standard, if anybody asks you what is the fair value of X asset or Y liability, you will not have a concrete answer. But at the end of this standard, if anybody asks, how can I do a fair valuation of X asset or a Y liability? Then yes, you will definitely be in a position to do that. And there are, of course, valuation experts who will be helping us out in doing the fair valuation exercise. Now, was there any standard under the IGAP regime that dealt with this? Answer is no. Because their fair value was not a pervasive concept the way it is under Ind AS. There you did have fair values, but that was more towards Ind AS 16. Okay, that is your erstwhile AS 10 that was there. It was more towards revaluation model. That was where we were stuck. And a little bit of fair valuation discussions here and there. But here it is pervasive. Here it is pervasive. Sir, kahan dekhne milta hai fair value? Well, of course, Ind AS 16 is one place where you get to see. The financial instruments chapter, Ind AS 109, Ind AS 32, Ind AS 107 has umpteen references to fair value. Your Ind AS 105, assets held for disposal, has references to fair value. Ind AS 36 on impairment has references to fair value. Ind AS 38 in some places has references to fair value. Ind AS 102 has references to fair value. Fair value at the grant date, right? That is the basis for which you are valuing your employee benefit expenses in the case of Ind AS 102. Like that, you have umpteen references to fair value across the length and breadth of financial reporting. And that is why fair value has immense significance in Ind AS regime. It is not just a simple value. Okay, ki chalo, I take this value as fair value today and I take that value as fair value tomorrow. Answer is no. It is a computed value. It is a computed value. And definitely, the computation mechanism is not simple. Okay, it's not simple. It comes with its own set of complexities, with its own set of difficulties, with its own set of conflicts. Okay. For example, I have a share that trades on NSE as well as the Bombay Stock Exchange. Now, Ind AS 109 requires fair valuation of equity instruments. My question is, which value are you going to take? Are you going to take value as per National Stock Exchange or are you going to take value as per uh, Bombay Stock Exchange? Both are markets. Yes.
सर
Yes.
कस्टमर को जहाँ ज्यादा बेनिफिट होगा इट इज मोर प्रोबेबल दैट कस्टमर विल एंटर इन दैट मार्केट सो वी विल टेक दैट वैल्यू
Let us see. Let us see. I mean, I'm just putting in the pointers. All right. Yeah, Nisha, you want to add on to something?
Volume of trading matters.
Okay. Yeah. So as we come. Okay, I'm just adding the pointers. We will see how to navigate through these landscapes. Okay, then for instance, I have inventories. Okay, you would have studied Ind AS 41 agriculture, where your biological assets are measured at fair value less cost to sell. So suppose I have mangoes that are grown on the tree, right? Now the question is, how do I do a fair valuation of them, right? Which price should I take? Should I take price for the Indian markets? Should I take price for the export markets? In India, which region's pricing should be taken? It's questionable at every point of time. Okay. And these are the instances what Ind AS 113 seeks to iron it out. Does Ind AS 113 give us a formula to calculate fair value? Answer is no. For instance, you would have studied share valuations. In that, you have something known as Gordon's value. Yes, Gordon's value is there to calculate the value of the share. P0 equals D1 upon, I think, KE minus G. Okay, cost of equity minus the growth that you're expecting. Okay, so this is a formula that is there by Gordon, that is given by Gordon. But is this formula prescribed by Ind AS 113? For a share valuation, I can always look at market price of the share. If I cannot look at market price, I will look at comparable values if my share is not traded. If comparable values do not exist, I can follow a DCF valuation. That is nothing but your Gordon's formula. But what are you going to do? Does Ind AS 113 tell you you have to use Gordon's formula to calculate the value of the share? Answer is no. For Gordon's formula, you have cost of equity, that is a significant point in the denominator. Now, cost of equity आप कैसे measure कर सकते हो? You can apply William Sharpe's model. Yes, that is the capital asset pricing model. You can apply any other model that is in force, right? So now the question is, does Ind AS 113 come out with a rule-based approach for applying a particular value, a particular formula, a particular output, or does Ind AS 113 only give a process? Does it give a principle? Does it give a mechanism? That's what it does. What Ind AS 113 does, and in general, the entire Ind AS system of standards is, it is a principle-based approach. It is not a rule-based approach. The problem with the rule-based approach is the focus will be on following the rules, and a non-compliance with the rules would amount to a non-compliance. The advantages of a principle-based approach is you can be flexible in your approach, but it comes with its own sense of caveats. There is a lot of judgment, a lot of bias. When rules are there, you will not put your head. It's objective. You see the standard, you see the rules, apply the rules, do your financial reporting, get your auditing done, and the story ends there. With the principle-based approach, हम लोग क्या करेंगे? We will apply the principles. Principles give a lot of choices. You have to do a particular valuation. Okay, for instance, you have to measure the value of the decommissioning liability. But there is also the conceptual framework to consider. There is also the point of cost benefit analysis to consider. So there are multiple events or multiple variables that can be considered, and you can adopt a flexible approach in your reporting. The question is, are these flexible approaches adopted to wriggle out of a situation, to escape out of a tight spot, or is it a genuine circumstance that we intend to follow? Okay, so that is what the principle-based approach comes with, its own set of challenges. For an auditor to audit under a rule-based approach, you just follow a checklist-based audit and you are done. But in a principle-based approach, like how it is in India, the auditors have significant challenges because they not only have to evaluate the numbers, they also have to go behind the numbers and evaluate the management estimates. They have to evaluate the fair value estimates. They have to evaluate the judgment that is taken behind those estimates. They will have to look at a lot of things which are not on paper before they can certify that a particular number gives a true and fair view of that asset or a liability. Okay. So in this context, let us now commence our discussion on Ind AS 113. Yes. So what are we going to discuss is the need for this standard and what is the objective and scope of this standard. What do we mean by fair value? We will definitely have a discussion today. And then we will move on to valuation of non-financial assets, valuation techniques. So we start off with valuation pertaining to assets because that is the simplest. It is the longest in terms of content and it is easier to understand from a student's perspective. Then we apply similar principles for valuation of liabilities and equity. Then we shall look at offsetting items, fair value at initial recognition, and we close with that. We look at the disclosures. Okay. So now, why do I need Ind AS 113? Okay. Normally, assets and liabilities are exchanged between parties at their agreed terms and conditions based on prices which might not be at arm's length prices. For example, there is a loan that is taken by a subsidiary from its parent. Now, will the parent charge interest? Answer is may not charge interest. बोलता है ये तो अपना ही है. What will happen if I charge? But if you do not charge interest, is it a transaction at arm's length? Answer is obviously no. You don't give money free of cost. So Ind AS 109 has its own mechanism of measurement of such loans. Okay. But point is, there could be certain transactions which might not be at arm's length prices. To define fair values, it should be ensured that the values reflect all assumption or adjustments to change from a transaction-specific, entity-specific value to a normal transaction which is common for all interested parties. So what this standard tells us is the value that is from the perspective of market participants would be considered as a fair value. That exactly is what is your fair value. We have a very beautiful definition of fair value, which I will take you through. But for now, you understand that value should be from the perspective of market participants. So Hemant has a question that what is arm's length? Arm's length is basically a fair valuation term that is used. Okay. You would have studied in your transfer pricing something known as an arm's length price. Okay. You have those 5 methods, right? Comparable, uncontrollable price method, and then transaction net margin method. Aise karke there are 5 methods in which you can determine the arm's length price. The arm's length price is essentially a value that is unbiased. That is unbiased. A value that is fair to the seller as well as to the buyer, fair to the lender as well as to the borrower. A transaction that is, what you can say, that is enumerated, a value that is captured based on market terms and not on entity specific terms. That is what is a fair value. Okay. So that is what is an arm's length price. That is what is an arm's length price. So now let us move on to the next. Without Ind AS 113, what would happen? See, there is a shift in your accounting perspective. While the ICAI primarily had a cost model of accounting, Ind AS does have substantial methods of substantial application of fair value. Ind AS 109, 105, investment properties require disclosure of fair values. In fact, there is a carve out in Ind AS 40. IAS 40 tells you can do a valuation of your investment properties at fair value and take the movement to profit and loss. Are you able to follow? Ind AS 40 does not allow that. Ind AS 40 came with a carve out stating that this will continue to be accounted at cost, but we will give a disclosure of the fair value. Okay. So therefore, you have fair value approaches everywhere. Absence of guidelines to fair value, if this was not there, then the true and fair view of financial statements would not be achieved, because there is no set of principles given for determining the fair value. The relevance and faithful representation, these are the fundamental characteristics of financial statements, and verifiability would end up getting violated, thereby resulting in a violation from the conceptual framework for financial reporting. So therefore, what Ind AS 113 does it ensures a compliance with the framework. All right. So what are my objectives and what is the scope of Ind AS 113? Well, the objective and scope of Ind AS 113, objective is to define what is fair value. We will see in a while. It sets out in a single Ind AS the framework for measuring fair value. See, you have fair value in every standard. So, the standard setters had two options. First option was, in every standard, when you mention fair value, go on defining what is fair value, go on defining or go on setting out the rules for measuring the fair value. Then what would happen? Each standard's length would increase by maybe another 40 to 50 pages, 60 to 80 pages. Now, this was the first choice. Second choice was, you cross-reference that term to a single standard, and when you cross-reference that term to a single standard, you will end up reducing the volume of each separate standard, and you have a concise fair value measurement standard that is there. So the standard setters obviously opted for the second one, because as it is, your standards are bulky. As it is, your standards are bulky. Okay. And to give the disclosures. So these are the three things. Define fair value, give a framework, and make the disclosures. Applicability, when another Ind AS requires or permits fair value measurement. When another Ind AS requires or permits fair value measurement. So, for instance, Ind AS 109 requires fair value measurement of investment in equity shares. So, the when is coming from there. This is an example, okay? This is an example. This is not conclusive. Ki sirf 109 batata hai. It is an example. And how to do the fair valuation? Ind AS 113 will step up and say, okay, so I need to ask you to do a fair valuation. Now I will do the fair valuation from myself. Okay. So that is the applicability of Ind AS 113. Non-applicability, measurement and disclosure. Pertaining to measurement and disclosure, Ind AS 102 already has its own mechanism of fair valuation, its own mechanism of disclosure. So it is not going to come here. Ind AS 116, you people have studied Ind AS 116? Yes?
Yes, sir.
अच्छा, तो Ind AS 116 में आप valuation कैसे करते हो? You take an incremental borrowing rate, right? आप discounting के लिए कौन सा rate लोगे? You will take the incremental borrowing rate to do a valuation of your lease liability. Yes or no?
Yes, sir.
Because the fundamental concept of Ind AS 116 is, I am undertaking a lease, I am entering into a lease because I am unable to buy. So basically, you are committing yourself to a fixed set of payments, which in turn gives you a right to use that property or asset in the manner that you like. So they wanted to come out of this off-balance sheet financing approach, and that is why Ind AS 116 was brought into place. And that tells you how you have to determine the fair value of the lease liability. So yahan pe it is not covered. Okay. Measurements which are similar to fair value in some cases, but are not exactly fair value. For example, net realizable value in Ind AS 2 or value in use in Ind AS 36. So this is your measurement and disclosure. Disclosures of Ind AS 113, I mean non-applicability only on the disclosures part. Measurement part we very much will follow Ind AS 113, but disclosures are under the respective standards, that is plan assets at fair value, assets for which recoverable amount is fair value less costs of disposal. Okay. So the disclosures go under that, but the measurement is in line with Ind AS 113. Are we okay with the objective and scope? Yes. Yep. So now let us move on to certain examples. All right. So this is taken again from your study material. Okay. So the question is, what am I items covered? This is examples of items covered under Ind AS 113. So Ind AS 105 requires fair value less cost to sell for assets held for sale. So that is there under Ind AS 113. Fair value through P&L or other comprehensive income under Ind AS 109. Lot of applications are there. PPE measured using revaluation model as per Ind AS 60. Biological assets measured at fair value under Ind AS 41 for biological assets. Okay. So these are certain examples where you will see an application of this standard. Okay. It's not exhaustive, but you will be able to appreciate that a huge chunk of transactions do come in at fair value, for which this is a critical standard. Okay. Now we come to our set of discussion. Okay. A very beautiful discussion that is there as far as the fair value definition goes through. And we will be spending a lot of time discussing this with multiple examples, with multiple cases before we move on to the other slides. So what is fair value ultimately? So it is given in para 9 of this standard. The price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants at the measurement date. You should be able to recite this definition even in your sleep, not for by-hearting purposes, but because of what all is covered. It says that it is the price. Which price? That would be received to transfer an asset or paid to transfer a liability in an orderly transaction between market participants at the measurement date. So we have price, appropriate market, market participants, orderly transaction, and measurement date. These are the 5 pillars on which Ind AS 113 fair value definition stands. Now, what is important to note is, how am I viewing this from I'm viewing the definition of fair value from which perspective? Am I viewing it from the perspective of a buyer, or am I viewing it from the perspective of a seller? What is my perspective if you see this definition?
The other counterparty in market.
But maybe my question is not clear because I see conflicting answers. My question is, you read this definition, it is from the perspective of an exit price, or is it from the perspective of an entry price?
Both.
Both. जरा ध्यान से पढ़ना definition. Yes, Nisha, what do you think?
Exit.
Exit. Yes, Nisha.
Going to say exit.
Exit. It is an exit price.
Yeah.
Okay. Yes. What is an exit price? The price that would be received to sell an asset. Matlab fair value wants you to, the standard wants you to determine the fair value in the sense that you have an asset, uska fair value karna hai, you want to sell that asset, तो उसका value कितना है? So it is, you want to come out of this asset. You want to realize the price of this asset. So it becomes an exit price for the holder of this asset. Or amount paid to transfer a liability. Amount paid to transfer a liability, amount paid to settle a liability. Are these two things the same or are these two things different?
Different, sir.
What is the difference between settling a liability and transferring a liability?
The settlement is maybe a lesser or amount that we oblige for that liability,
Okay.
or transfer is the same amount which we have obliged for that liability.
Okay. Anybody else? Nisha, you want to say anything?
Settlement can always be lower than what the liability is expected of.
Okay.
Like it can be at a reduced price, it can be at a discounted value also.
Yeah,
But it
Hemant.
cannot
Okay.
value.
Okay. Okay. Hemant.
The settlement will be under the situation of a stress
Okay.
situation.
Okay. Yeah, that's what even Nisha meant. Ginny, you would like to add something? Difference between settlement and transfer? Okay, fine. There is no concept of stress in the case of settlement. Okay, settlement is basically you are extinguishing the liability by paying it off. You are extinguishing the liability by paying it off. Suppose I have debentures. I pay the debenture holders the amount and extinguish the debentures. We call this as settlement. I do a fair settlement. I promised to pay them. I had taken debentures worth 1 lakh. I paid them all the dues with interest and the principal. And then the debentures in my books are extinguished. The liability no longer exists. We call this as a settlement. Settlement can be under stress. Settlement can be at fair value. Settlement can be at agreed terms. Settlement सिर्फ stress में होगा. That is not the concept. But suppose I have debentures in my books. Another company is in urgent requirement of a loan. So what? It does not have time to approach the banks. It does not have time to undertake a credit rating valuation, do the whole process. It takes 3 to 6 months before it can actually get the funds. So what it does is it goes to the open market to see if any funds are available. And today I am in a position where I do not need this liability on my head. I have two options. I can either settle it, or what I can do is I can transfer this liability which is sitting in my books to the other entity's books. So tell me one thing. Is the liability settled in this case? Is the liability settled in this case?
Yes, so my liability is extinguished.
It's not settled. It's not settled. I have transferred the liability. The debentures are still open. The obligation has gone from my head. That is okay. But have I paid to the lenders? Answer is no. The position is still open. My obligation as a liability is no longer there. But is the liability still open and outstanding? Do you agree?
In perspective of the lender here.
Yes, it is still open. मेरे books में नहीं है, but it is there in the other parties' books. So debenture holders on the due date, they will not come to me. They will go to the other party for the purposes of liability. For the purposes of liability. We see innumerable cases of transfer of liability. That's right. So to bring in Hemant's example in perspective, all these business entities or even individuals, what do? If they get a better rate of interest, they just shift their liability from one bank to another. They shift their liability from one bank to another. So is the liability settled? Answer is no. The liability is only, in this case, from a bank's perspective, the asset is getting transferred, but from entity's perspective, liability continues to remain. So can I say that I have settled the liability? Answer is no. मैंने सिर्फ बैंक बदल दिया. So in this case, the first example that I gave, I remove my obligation and put it on somebody else's head. That is known as transfer of a liability. And when I obviously transfer a liability, will I get money for it or do I have to pay for it? Bolo, I have debentures. I give debentures to another company. The debenture holders will go to that company at the time of maturity. So when I'm doing this transfer of liability, will I get money or will I have to pay money to the other party?
Pay money.
You will have to pay. He will not pay you and he will not pay the debenture holders. He will say, if you want me to take your liability, you pay me first. Give me the liability. Then after a few years, when the maturity date comes, I will settle the liability. So therefore, this activity of transferring the liability for which I make a payment, is known as the price that would be paid to transfer a liability. This is not a settlement. Be very careful. This is not a settlement. So in both the cases, whether it is an asset or whether it is a liability, what is the perspective that the standard is taking? The perspective is, I have something with me, I want to get rid of it. I have something with me, I want to get rid of it. I want to come out of it. I want to realize the monetary worth of it, or I want to pay off the monetary worth and come out of the liability. So in all these circumstances, my intent is from the perspective of an exit price, Okay. So now another example. You have foreign currency with you. And you are at the airport and you want to exchange it. Acha, when you go to the exchange counter, when you go to the foreign exchange authorized dealers counter, there are two prices. The price for bidding, the price for asking. What value are you going to assign? Okay. There is a buying rate, there is a selling rate. Now the question is, what are you going to assign the value to your dollars? You have dollars, suppose, and you want to realize those dollars and get rupees, because now you are not going to undertake any foreign currency transaction. So my question is, how am I going to value the dollars in my hand? Will I take the buying rate or will I take the selling rate?
The other person is buying it from, the other person is buying the dollars from.
Yes.
So, the buying rate at which the other person would buy the dollars from.
Yes. So typically at the airport, the dollar you would be having, for instance, 83.85. That means 83 if you have to sell the dollar to the authorized dealer, 85 if you have to buy the dollar. So suppose kijiye, you went to the authorized dealer, you had $100, you gave $100 to him, and in return, he will give you 8,300. Just 2 minutes later, you see that you need another $100 back, and you go to him. He will say, sir, now I will expect from you 8,500. Why does he have two different rates? That is his business. His business is buying and selling currency. So this difference, that is the spread, is what is his profit margin, Now, my question is, when you had $100 in your pocket, what will be the fair value of that? Will it be 83 or will it be 85?
83, sir. That's
Eight-
what I
83.
83.
83.
Jeannie, agree? Erin, Mamta, Niranjan, Pooja, everybody agree? 83?
Yes, sir.
Obviously, because that is the value that you can expect for the dollars that you are having. That's it. Okay. So you will obviously end up taking the lower rate, because that is what is going to be realized for your value. That is what is going to be realized for your value. Achha. Now, suppose you have okay, you have gold, and you want to make jewelry out of it. Okay, so you go to any store like this, Tanishq or whatever, XYZ store, so many stores are there. So you go to one of those stores. Okay, today the market price of gold is, let us say you have 10 grams of gold. Okay, very expensive asset in today's times. Okay, so that is something like, let us say 7,500, or let us take 8,000 rupees per gram. Okay, so 8,000 rupees means the value is 80,000. My question is, when you give this gold for converting into a jewelry, some bracelet or some necklace or whatever it is, my question is, will you get 80,000 rupees exact market value in exchange?
No, sir.
नहीं मिलेगा आपको. You will not get the same value. In fact, if you go to a store, what they will do is, even if it is the purest gold, okay, even if it is the purest gold, 99.99% purity, government hallmark certified 24 karat gold, government के account से ही लिया है हमने. Okay, government also trades in gold and bullion. All of us are aware it has its own entities from where you can procure as a customer, and that is the most reliable form of gold that is there. Even if you buy that gold, and you go to any shop like, let us say, PNG or Tanishq or whatever, okay, Malabar or whatever it is, they will deduct anything between 1% to 2%. And on top of this, they will add making charges. Okay. Suppose you go to a local jeweler. He will not charge that 1 or 2% reduction. But can you say that becomes the fair value? Answer is no, because the ornament that comes out will probably have 9.5 grams of gold. 0.5 grams, he will say, sir, wo wastage ho gaya. That is exactly the 1 to 2% that these established brands take it as upfront deduction from your end. So for you, the value of the gold, what could it be? It could be with a reduction of 1 to 2%. Are you able to understand? Yes?
Yes, sir.
So my point is, you will have to evaluate this from the perspective of coming out of that asset, or from the perspective of monetizing that asset, or from the perspective of shifting the liability from your head to somebody else's head. That is the whole basis for starting a fair value measurement. So that is something like an exit price. Now, let us move on to another example. Okay. Let us consider that you are having a land bank. You are having a land bank. Sir, kitna land hai? Let us suppose you are having 20,000 square meters of land or 200,000 square feet. Okay. Now this 200,000 square feet, you as an entity are having only the permission to construct residential complexes. You are having only the permission to construct residential complexes. But there on this land, commercial complexes can also be constructed, but you as an entity are not having the expertise, are not having the capacity to undertake commercial constructions. Okay. Commercial constructions involve huge capital outlay. It involves huge, what you can say, the whole setup is different. So you do not have the capability, the licenses, the permission to construct commercial complexes. But on that parcel of land of 200,000 square feet, commercial can be constructed. So tell me now, this limitation that is there, on that plot of land, is it an asset related limitation or is it an entity specific limitation?
Entity specific.
Entity specific limitation.
Entity specific. So all of us agree that it is an entity specific limitation. Okay. Now, let us suppose that this parcel of land of 200,000 square feet is held by the entity. Let us give a name to the entity, A Limited, is held by A Limited with no decided usage, So it has categorized it as an investment property under Ind AS 40. It has categorized it as an investment property under Ind AS 40. Now my question is, Ind AS 40 requires a disclosure of the fair value of this property. Now, on this plot of land, which is 200,000 square feet, if I go for a residential construction, the valuation that will be there is around, let us suppose, 1 lakh per square foot. If I go for a commercial construction, this is 2,50,000 per square foot. Now, you are owning the asset. You have to determine the fair value. Tell me, what will be a fair value from your approach, from your understanding? Till now, we have seen what is the fair value, and we have seen the characteristics of this asset. What it is, the limitation is entity specific or asset specific. All of you said it is an entity specific limitation. So you are having this land. Okay. Now, my question is, what will be the fair value of this land? Will it be 100,000 per square foot or will it be 250,000 per square foot? What do you think?
Being conservative, I take 100,000 square feet.
How much are you going to take, Nisha?
Being conservative, I'll take 100,000.
Okay. To be conservative, you are taking 100,000. What about the others? Come on, tell your answers. Erin, what do you think? Pooja?
Commercial, sir.
Commercial value. So Erin will say the value is 250,000. Yeah, Hemant, tell me.
Sir, we have to first check whether it can be sold as a commercial property.
It can be. Okay, I'm not putting any limitation on the asset. That's
Then
why
I will go for commercial rate.
then you will go for a commercial rate. Pooja,
So let's go for commercial, sir.
what happened?
Commercial.
Commercial value. What about Genie?
Sir, hello.
हाँ बताइए.
Sir, I also will go for commercial. I will give the higher value to the.
Monica?
Sir, commercial.
Commercial. Exactly. See, today I am not in a position to do a commercial construction for whatever reason. Okay. I do not have the expertise. I do not have the architects. I do not have the ability to construct, 15, 20, 40, 80 floors. Okay. I don't have that capacity with me. Okay. I come with my own set of limitations. So therefore, that licensing for commercial construction is not there for me. Let me just put things in perspective. Let us suppose this 200,000 square feet is there in a prime location. If it's Mumbai, let us suppose it is in a place like Bandra Kurla complex or in Nariman Point. If it is in Delhi, it could be something like Aero City or whatever is the area that is there. Whatever your city, the best locality that is there, where residential and commercial premises both exist. All these premises, what I mentioned, they do have probably some residential premises, some commercial premises also. So now my question to you is, the limitation that is put on me, is it a limitation for somebody who having the expertise for commercial construction?
No, sir.
It's not his limitation. It's not the other party's limitation. So my submission is, today if I sell this asset, and let me be very conservative and say that I cannot construct commercial complex. I can do only residential complex. So I will sell it to you for 100,000. Who is the loser at the end of the day? Myself. Because I do not know how to value my asset. I do not know how to value my asset. The counterparty will say, very good, give me 100,000. I will increase the value by just applying for a commercial construction license. I don't even need to do anything. I just apply for a commercial construction license. The valuation of the property will move from 100,000 to 250,000. There is no limitation on the asset. There is no limitation on the asset. There is no limitation on the counterparty. Who becomes the counterparty? Obviously, it could be XYZ. In simple terms, a market participant. In simple terms, a market participant. Now, that market participant is having the resources, the technical expertise, the assets, the capacity and capability to build a commercial complex on this. So when you sell the asset to him, you will definitely factor into the fact that, boss, this land is in a location that allows commercial construction. So please don't say that I will be conservative and do the valuation at 100,000. That's not what Ind AS 113 tells you. Ind AS 113 tells you look at it from the perspective of an exit price. Exit price is more than what you are capable of achieving if you had not sold it, does not make it unrealistic to achieve. My point is, today's date, is 250,000 capable of achievement? Can I achieve this value? Yes, definitely. By market में वही rate चल रहा है. The same rate is running in the market. Okay, when you enter into a hard negotiation, maybe 250K will become 240K, or it may even go to 260K. But my humble submission is 250 cannot fall to 100K because I have a limitation to sell. You cannot definitely say that. So let us all take what you can say, a decision that we will leave conservatism at intermediate. Okay. There are certain places where conservatism has its application. There we will definitely be conservative. But there are some places where the situation demands being realistic. This is one of those situations. Why will I sell something that is worth 250,000 for 100,000? Am I a rational business entity? Answer is yes. That is the basic presumption. I am a rational business entity. I work on sound commercial principles. And therefore, what I have to consider is, if I want to come out of this asset, if I want to realize this asset, I will sell it at the highest price that I know, that the market accepts. And that price for me will be 250,000. It will be 250,000. Are we able to understand? Yes.
Yes, sir.
Nisha, is it clear? Okay. Now, let us go one step further. Let us go one step further. Suppose you are checking this asset for impairment. आपने Ind AS 36 पढ़ा है?
Yes, sir.
Okay.
Yes, sir.
So Ind AS 36 requires you to calculate something known as value in use. Value in use. What is value in use? Can somebody tell me?
Present value of future expected benefit from the assets use.
From whose perspective?
Entity's perspective.
Entity's perspective. Yes. So today, if I had to determine the value in use for this particular land bank, it will be from my perspective, entity specific perspective. And therefore, the value in use concept that is there, that value in use is an entity specific value. Because I am ascertaining what will be the cash flows that I can collect by the sale or construction and sale of this property. Yes. And from that perspective, it will only be a residential complex that I can construct, not a commercial complex. Are you able to understand? So here I am not being conservative. I am saying that the definition of value in use itself comes from my perspective. And my perspective permits me to only use this for a residential complex. So when anybody talks to you about value in use, it is from the usage of the owner of the asset, from the perspective of the owner of that specific asset. So entity specific value, not market specific, not market specific. The whole point is, when I do a fair valuation, I will not look at my capability to construct. I will look at the counterparty's ability, what all they can do. And then I will do the valuation. Is it okay? Yes? Any doubts? No doubts? All clear? Yes? All right. So that is what is your definition on fair value. The price that would be received to sell an asset or paid to transfer a liability in a transaction between market participants. Okay. Now, there are 2-3 things. What is left out? Orderly transaction. Okay. What do you mean by orderly transaction? Transactions where typically you are not having any limitation. You remember कई साल पहले आप फाउंडेशन में थे, राइट? वो कई साल पहले आपने कॉन्ट्रैक्ट एक्ट पढ़ा था, कॉन्ट्रैक्ट एक्ट 1872. That Contract Act 72 had certain elements that made a contract voidable, right? Voidable. You remember what are those conditions? If it is sold under threat, coercion. Yes, you remember this? Threat,
Yes.
coercion, willful representation or fraud वगैरह. You remember this?
Yes.
Yes, sir.
याद है ना? कभी तो पढ़ा होगा. Yes.
Yes, sir.
So now my point is, when you have these barriers, it will not become an orderly transaction. It will not become an orderly transaction. When you have a gold coin, 10 grams gold coin, and you go to Tanishq, आप 1 पैसे के लिए भी लड़ाई करोगे, 1 रुपए तक नहीं छोड़ोगे. You will tell market value, वो बोलेगा 7,500, you will say नहीं, it is 7,501. करोगे कि नहीं करोगे? You will do it. But my point is, the same 10 grams of gold, when you are exchanging it in your family, will you fight for 1 rupee? You will say 7.5. ठीक है यार, give me 7,000, that is enough. Yes. Why? The transaction is not fair. The transaction is not fair. There is love and affection which is included in this transaction. वो free में आ रहा है, उसका value 500 रुपया है, right? So it is not a fair valuation. So when I call for an orderly transaction, it typically means a market-based valuation which is devoid of any limitations, like coercion, threats, fraudulent transactions, misrepresentations. All these things are virtually not there when you are estimating the fair value. Is it okay? Yes. So we saw price and exit price, to sell an asset or paid to transfer a liability in a transaction between market participants. We saw market participants in detail, and it should be an orderly transaction. Okay, devoid of any of those barriers to a fair contract. Okay. Now when I talk about measurement date, Acha, fair value, is it a value at a point in time, or is it a value over a period of time?
At a point in time.
At a point in time. All of you agree to that, right? That's it. So that is the measurement date. It is the value that is arrived at a point in time. So when I do the fair valuation of equity shares held as investment, I will take the value on 31st March, and that will be the fair value. So it is at a point in time concept or value as on a specified date, rather than an average or for the year average value. Okay. That is not what is fair value. All right. So that is your measurement date. And this finally leaves us with the last point of discussion, that is appropriate market. Okay. Now, let us see what is appropriate market. Okay. Okay. You remember I discussed with you in the beginning of this today's class, sir, what value should I take for valuing an equity share that is traded both on the National Stock Exchange as well as the Bombay Stock Exchange? Are the values same on the National Stock Exchange and the Bombay Stock Exchange?
No, sir.
थोड़ा सा फर्क रहेगा. There will be minor difference. 5 paisa, 10 paisa, there will be a minor difference, but there will be a difference. And then I left you at that point of time that we will come to it later. Now, Ind AS 113 categorizes markets into 2 broad categories. The first one is the principal market, The second category is most advantageous market. Most advantageous market. There are two categories. Acha. What is principal market? What is principal market? तो सीधा सीधा हिसाब लगाओगे तो principal market is that market which has highest number of buyers, highest number of sellers, highest number of activities as compared to any other market for the commodity in question. Okay. Highest buyers, highest sellers, highest number of transactions in respect of the commodity whose fair value you are seeking. All clear? Yes. What is principal market? Now, you remember the definition of perfect competition in economics? Can anybody tell me what is perfect competition that you studied in economics? Tell me, Nisha.
If I'm not, I think so when there are no barriers on either part of the buyer or seller.
Yes.
Barrier-
Okay. Anybody else would like to add something to that?
A market condition where there is no control over the demand supply of that characteristic for the related good, and mostly it is for the homogeneous kind of products where no monopoly exists.
Okay. Right. Monica?
Sir, particular one company can't decide the price. Many buyers and many sellers would, there could be.
Okay.
And free entry and free exit possibility. Possible.
So all of you put together have given perfect competition. So all of you have complemented each other, supplemented each other. Okay. So first thing is numerous suppliers, numerous customers. Such a way that no single buyer or supplier can influence the price. Each buyer, each supplier is knowledgeable. There is no influence on the buyers or sellers. It is purely determined by market forces of demand and supply. There is no artificial demand or supply here. And you have numerous people from whom you can buy or supply. My point is, in such a market, in such a situation, what will be the tendency of the selling price? What will be the tendency of the selling price? It will always converge. It will always converge to a fair value. Always it will converge to a fair value. और कुछ convergence हो ही नहीं सकता है. Are you able to understand? Yes?
Yes, sir.
Sir.
It's bound to happen. It's bound to happen. Okay. So in a scenario where you have numerous suppliers, numerous buyers, each of them are aware of the price, and you are having the maximum number of transactions. You are having the maximum number of transactions with no influence by any single buyer or seller. With no influence by any single buyer or seller. When this is the situation, the price for the particular commodity is always going to tend to fair value. ना किसी का फायदा, ना किसी का नुकसान. It will be fair. It will be fair. Okay. You would have gone through the news. Okay. I think Surat has opened the largest diamond trading center in India. Okay. You would be aware of it. Surat Diamond Bourse or something, they call it like that. Now, if you go there to find out the valuation of a diamond that you are having, and you want to sell it or determine the value, wahan pe the number of transactions that are happening related to diamonds, can it be compared to anywhere across India? Answer is no. Because those volumes are highest, the buyers and sellers are aware of the market dynamics, and none of them can individually impact the prices. And that is why the value of the diamond that you pick up from the Surat diamond bourse is bound to be a fair value, That is what you and I are going to align our definition on the fair value. Is it okay? Yes?
Yes, sir.
Okay, all right. Now, the impact that Ind AS 113 wants to drive is the more you have the buyer-seller transactions, the more your price tends to a fair value. The more it tends to a fair value. Okay. Now, when I talk about appropriate market, the standard tells that if a principal market exists, then the fair valuation, which is from the perspective of a market participant, which is a price that you expect to receive on sale of an asset or expect to pay on transfer of a liability. This value is always going to be from the perspective of the principal market. So if a principal market exists, for your commodity, then the value or the fair value or the market price in the principal market will become your fair value, I'm not yet coming to the definition of fair value, exactly how to compute, but what I'm trying to say is that will be the basis for determining your fair value. Are we able to understand? Yes?
Yes, sir.
So to come back to the question that, sir, I have shares which are traded on the Bombay Stock Exchange and the National Stock Exchange, which price will I take? The answer to that is look at the trades that have been executed in respect of that particular share that you have, where it is maximum. If it is maximum on the National Stock Exchange, the price on the NSE is what will be your basis for deciding the fair value. If you are looking at BSE having a higher volumes, then the price that is there on the BSE will be the basis for determining your fair value. Are we okay? Yes? Sure? So, first preference, principal market. Okay. Now, if I do not have the principal market, then we move on to the most advantageous market. Now, what is the most advantageous market? This is the market where the highest price is available. Just give me a minute. Okay, yeah. So, when there is no principal market, then we come to the most advantageous market. What is the most advantageous market? From the perspective of the entity who wants to determine the fair value from that entity's perspective. Obviously, it will be the market where the highest price is available. The market where the highest price is available. Okay. Now, let us take the case of biological assets. Let us take the case of biological assets. Let us suppose you have produce and the price in the local market, let us suppose, is 10,000. In the export market, it is 15,000. It is 15,000. Now, what will become the most advantageous market? What will become the most advantageous market? Export, because I'm having the highest price. I'm having the highest price there, most advantageous from my perspective. But the whole point is this. Suppose you are an entity situated in, where are you situated? Let us suppose we are talking something like oranges. Okay. Now, hypothetical example. Okay. Let us suppose that you are oranges. You are situated in Nagpur. Okay. Now, I want to determine the fair value of this produce that I have. If I operate from the local market, I will have to spend 1,000 rupees for movement from my farm to the local market where I can sell it off. So I will be paying a transportation cost of 1,000 for this much of the produce. So 10,000 minus 1,000, this comes to 9,000 rupees. But suppose I operate from Nagpur and I have to come to the export market. The export market, again, hypothetical. That's why I'm saying, okay, you either have to come to Nhava Sheva port, which is in Bombay, or you will have to go to Visakhapatnam port, that is in Andhra Pradesh. Okay, Andhra Pradesh, Telangana, that side. So you have two ports. You have to either come here to the western port, that is Nhava Sheva in Mumbai, or you will have to go to Visakhapatnam in Andhra or Telangana. Okay. So to move from Nagpur to these two locations, let us suppose hypothetically you have a transportation cost of 7,000. You have a transportation cost of 7,000. So now 15 minus 7, what will remain with me is 8,000. What will remain with me is 8,000. Now you tell me, from the purpose of net cost, which is becoming most advantageous?
Local market.
Local market, right? Now you tell me what basis for fair valuation will you consider? Will I consider only the market price, or should I consider net proceeds?
Net proceeds.
Anybody else would like to add anything or would give a different opinion? Should I consider the price or should I consider the net proceeds? Obviously, I will consider the net proceeds, because if I have to consider the exit price of the asset, I have to first bring the asset to a saleable market. Yes or no? Bhai, the cost of the selling price of my oranges is 15,000 in export market. But मुझे marketplace में लेकर के तो जाना चाहिए ना. I have to take my inventory, my produce to the marketplace to get 15,000 rupees. यहाँ बैठे बैठे I'll not get 15,000 rupees. Right? So therefore, your estimate of the most advantageous market should not be on the basis of price, but on the basis of net proceeds. Now, let me take one step further. Price, transport, and you need to engage a broker. Whom you will be paying the brokerage. Okay. Now, local, export. I'll just slightly modify the pricing. No. 10,000, 15,000, 1,000, 7,000, 4,000, 1,500. So 10 minus 1, 9, 9 minus 4, 5,000. Now, 15 minus 7, 8, 6,500. Now, which becomes your most advantageous market?
Export, sir.
It is considering the net amount that will be left, it becomes the export. Acha. Now, one question. Transaction costs. You need to put a broker. उस broker को थोड़ा commission देना पड़ेगा, so that he will work towards selling your products. Okay. These are transaction costs. Now, my question to you is, these transaction costs, are they specific to your product, or is it specific to the transaction?
Transaction specific.
It is transaction specific. Now, let me go one step further. So, what will be a transaction cost for you? Will it be same for the other person?
No.
Not necessary. It depends on your negotiation skills. It depends on what are you selling. It depends on the quality of your product. So, transaction cost, such as brokerage, will I actually eliminate in determining the most advantageous market? Should I deduct it in determining the most advantageous market?
No, sir.
नहीं करोगे आप deduct. Sir, why will I not deduct? My net proceeds is more in export. Well, it is more in export, but that is because probably you were not efficient in negotiating on the transaction costs. Ultimately, what am I determining? It is a fair value as a price between market participants. In a transaction cost, the element of market does not exist, because this becomes an entity-specific cost. Are you able to understand?
Yes, sir.
Yes, sir.
So therefore, when I determine my most advantageous market, okay, let me put it this way. When I determine, okay. When I determine my most advantageous market, this does become the basis for determining. But when I determine the fair value of the product, I will have to exclude the transaction cost, because transaction cost is no longer going to be a market specific cost. It ends up becoming an entity specific cost. Are you able to understand? Yes.
Sir.
So my most advantageous market gives me the net proceeds after deducting transaction cost as well. But जब मैं बात करूंगा fair value का, transaction costs has no place in fair value determination, because that is specific to you as the transaction value. That is specific to the transaction that you are entering into. That is specific to the negotiation that you have done with the entity whom you are paying for the transaction cost. Are you able to understand? Yes. समझ में आ गया?
Yes, sir.
So, if there is a principal market, please take the fair value from the principal market. If there is no principal market, then you will come to the most advantageous market. In the most advantageous market, I will determine the net proceeds. What is your net proceeds? Your net proceeds will be estimated selling price minus the transport minus the transaction cost to arrive at the net proceeds. And that net proceeds, which is most favorable to you, will become the most advantageous market. But when I talk about fair valuation, I will not consider transaction costs, because these are entity specific costs or transaction specific costs, and your fair value is only from the perspective of the market participant, and therefore you will consider only the price minus the transportation cost. Are we okay with this? Yes. All clear?
Yes, sir.
Now, let me go one step further. ये price and transportation cost is only an example for something that is wider in implication. When I talk about transport, I essentially mean any cost that alters the characteristic of the commodity in question. Sir, क्या बोला जरा फिर से बताइए? Any cost that alters the characteristic of the commodity in question. Sir, transportation कौन सा characteristic alter करता है? Transportation cost alters the geographical location of your commodity. You are able to move the asset from your farm to the marketplace. So that is altering the location, that is altering the geography of your commodity. Are you able to follow? Now, similar basis, you have to do the fair valuation of, suppose, a land जिसमें एक, there is a very old structure. There is a very old structure that is there on that land. So now, if I have to determine the fair value of that land, obviously, tell me one thing. Is your land going to be fetching a better price, or it becomes more saleable if that old structure is demolished? Tell me.
Yes.
So therefore, if I have to make my land saleable, I will have to incur demolition costs.
Yes, sir.
That demolition cost is making your land saleable.
Yes,
Yes.
sir.
That demolition cost is altering the characteristic of the land.
Yes.
So therefore, will I consider the demolition cost in determining the fair value?
Yes.
Yes, sir.
तो जब मैं बात करता हूं ट्रांसपोर्टेशन कॉस्ट is only an example to make you comfortable with how to determine the fair value. When I talk about transportation cost, मेरा इंटेंशन नहीं है कि मैं सिर्फ फ्रेट की बात करूं और फिर मैं लॉजिस्टिक्स की बात करूं. My point of discussion is any cost that alters the characteristic or features of the commodity in question ends up becoming a deductible cost from the expected selling price to arrive at the fair value. Is it okay? Yes?
Yes, sir.
ठीक है? Monica,
Yes, sir.
Nisha, Niranjan,
Yes, sir.
Mamta, all okay? Erin? Okay, all right, fine. So that takes care of the first part. That takes care of the first part. That is your definition of fair value. That is your definition of fair value. And we have spent quite a lot of time. Whatever we have discussed, let us run through that theory. Okay, हम इसी स्लाइड के ऊपर बैठे थे. ये स्लाइड में हमने already we have discussed all the concepts. Now we shall just run through the theory. I'm sure you will now be able to connect the dots. Okay, all right. Fair value is market specific and not entity specific. I have always told you that. That is why when we saw the first example, land, your valuation is 100,000, but commercial valuation is 250,000. All of you said, sir, we will take 250,000, which is right, because that is a market specific valuation, not colored with an entity specific restriction. Okay, so that is the first thing. It takes into account the characteristics of the asset or liability. You have to take asset specific features into consideration. Example, the condition and location of the asset and restrictions, if any, on its sale or use. However, the restrictions or conditions related to a particular entity should not be taken into account. मेरा restriction है कि मैं residential ही बनाऊं. I will not take that into consideration, because in that case, the valuation will not end up becoming fair because you are imposing a restriction on that. So therefore, it should be free. It should be free of any bias, free of any restriction. Okay. Now, because the fair value is based on market participant assumptions rather than any entity specific conditions or restrictions, which usually will not affect fair valuation of an asset or a liability. An entity shall measure the fair value using the assumptions that the market participants would use when pricing the asset or liability, assuming that market participants act in their economic, which interest? Best interest, not conservative. आप conservative मत बनो. You are here to make profit. Please accept that fact and present your numbers accordingly. There is no harm in presenting a higher value if you have a basis for the higher value. But there is a harm in deliberately presenting a lower value in the name of conservatism, because ultimately, if I look at conservatism, if you read the literature, conservatism tells us that I will not account for any incomes that will arise in the future today, but I will account for all the losses that will arise in the future today. So इससे क्या होगा? There are 4 things which will happen. Either income will be suppressed, loss will be overstated, assets will be suppressed, or liabilities will be overstated. All these 4 things do not give a true and fair view. All these 4 things do not give a true and fair view. So the problem with conservatism is it comes with its own set of problems. It comes with its own set of problems. In the name of conservatism, we end up forgetting what we are meant to do in the first place. Okay, so that is why conservatism takes a back seat and realistic accounting takes a front seat. Realistic accounting takes a front seat. Okay, now, what is the rule? Ignore any entity specific restrictions or conditions. Asset or liability specific restrictions or conditions which are getting transferred to the buyer will be considered. Fair enough? We have seen all this. Now, I leave this question to you for homework. We have already discussed this question only. All right. You can also go through this for homework. Gaadi ke jagah car aa gaya yahan. Okay. Now, the next part is unit of account. The next part is unit of account. Sir, what do you mean by unit of account? What do you mean by unit of account? Unit of account means how am I going to determine the fair value of the items in question? Should I consider them as standalone assets or standalone liabilities, or should I consider it as a group of assets and liabilities? Now, Ind AS 113 will not answer this question. Ind AS 113 will not answer this question. Ind AS 113 tells how to calculate fair value. Ind AS 113 will never tell you aggregate these assets, you aggregate these liabilities, you aggregate these net assets, you give me standalone assets or standalone liabilities. That is not what Ind AS 113 will tell you. That is what the respective standards will tell you. For instance, Ind AS 36. How many of you have studied Ind AS 36 में cash generating unit?
Yes, sir.
याद है कुछ पढ़ा है cash generating unit? Yes.
Group of assets and liabilities.
Group of assets and liabilities that are capable of generating cash flows largely independent from the other assets and liabilities. Yes or no?
Yes, sir.
That
It
is
can
what is
be
your CGU?
business segment also operation.
क्या कह रहे हैं?
It can be a separate operation also.
No, it can be a separate operation also. Absolutely right. Okay. So if I talk about a CGU and I have to determine the fair value, then that fair value, will I determine it from the perspective of individual assets or liabilities, or will I determine from the perspective of net assets forming part of CGU?
Net asset.
Net assets forming part of CGU. Absolutely right. Okay. So therefore, which standard is requiring you to measure from the perspective of the assets and liabilities as a group? It is Ind AS 36. It is not Ind AS 113. 113 will never tell you, you measure this asset individually, you measure this as a group. Answer is no. So that becomes your unit of account. Unit of account means what? The fundamental basis for measuring the fair value of either individual items or group of items. Individual karna hai, then the standalone assets or liabilities will become your unit of account. That is the maximum disaggregation that you can achieve. The maximum disaggregation that you can achieve. Okay. And suppose if we talk about the business as a whole, then I will aggregate all the assets and liabilities. So the level at which an asset or a liability is aggregated or disaggregated in an Ind AS for recognition and or measurement purposes. So other Ind ASs will specify whether a fair value measurement considers an individual asset or liability or a group of assets or liabilities. Whether asset or liability is standalone or a group of assets, a group of liabilities, or a group of assets and liabilities. That means ये बात कर रहा है net assets का. For recognition or disclosure purposes depends on its unit of account. Unit of account to be determined in line with the Ind AS that requires or permits the fair value measurement except as provided in this Ind AS. So now, an entity having certain securities are quoted at market price and these are recognized at fair value in the balance sheet. Obviously, you have multiple investment in equity shares. You will do the measurement at individual or standalone level rather than a group of assets and liabilities. Is it okay?
Yes, sir.
And when I look at evaluation of fair values to identify impairment as per Ind AS 36 for cash generating units. These group of assets will be used in order to find fair values for the requirement of such standard. Okay. So that is done. Market participants we saw. It is always from the perspective of the market participant. That is price that would be received or paid on sale, settlement or transfer of an asset or liability by or to a market player. Who are market participants? The parties which eventually transact the assets or liabilities either in the principal market or the most advantageous market. What is the characteristic of market participants? They should be independent and not a related party. However, it comes with a caveat. If related parties have done the transactions at arm's length, then the transaction can be between related parties as well. Parties should not be under any stress or force, and all parties should have reasonable and sufficient information about the same. Okay. Now, an entity has a legal restriction to use land for commercial purposes in the next 10 years, irrespective of its holder. The fair value of land will include this restriction about its usage because it is an asset related restriction, and any buyer will need to take over with a similar restriction to use the land for the next 10 years. Okay. Now, the place where I stay, okay, our society is spread across two sides of the road. Okay, so this is, let us call it block A. Let us call it block B. Now, today somebody wants to sell this. This in between thing is a public access road. Public access road. Tell me one thing. If somebody wants to sell flats either in block A or block B, does it come with this restriction? Is this a restriction in the first place? आप इतना बताओ. Is this a restriction in the first place?
No, sir, it is required for any use of the property, sir.
हाँ, but ठीक है. मैं थोड़ा सा कहानी में थोड़ा सा और facts बताता हूँ. You are in block A and the children's park is in block B. Is this public access road? Public access means गाड़ियां चल रही है वहां पे. It is a road open to general public. Okay. तो आप मुझे बताओ. You are in block A, children's park is in block B, and now you are selling this asset to a family that is having children. Is this public access road a restriction?
Yes.
आप अपने बच्चों को नहीं, छोटे बच्चे हैं, आप उनको पब्लिक एक्सेस रोड पे नहीं भेजोगे. और आपको चिल्ड्रंस पार्क में क्या दिलचस्पी है? आप घड़ी घड़ी थोड़े ना जाओगे चिल्ड्रंस पार्क में, बट यू वांट योर चाइल्ड टू प्ले, तो एवरी टाइम आपको जाना पड़ेगा सड़क पार कराने. एंड आप आ भी नहीं सकते बिकॉज योर किड विल नॉट बी एबल टू क्रॉस द रोड. तो जब तक आपका child plays there, you have to sit there, and then you have to bring your child back home because there is a public access road in between. So is there an inconvenience to you as a customer? Yes, there is an inconvenience to you. Now, this inconvenience is getting transferred along with the asset.
Yes.
So
Yes.
this is an asset-specific inconvenience. This is an asset-specific inconvenience. So will I factor this in determining the fair value of this flat?
Yes.
Obviously आप इसको नहीं छोड़ सकते, right? You cannot ignore this. Okay, suppose block B is here and block A के end में you have the medical facility for old people. Same issue, the public road becomes a restriction. Public road becomes a restriction. अच्छा, one of the blocks is having grocery stores. तो आपको हर बार सड़क पार करके जाना पड़ेगा, ग्रोसरी लेके आना पड़ेगा. आप ना तो गाड़ी लेके जा सकते हो बिकॉज डिस्टेंस इतना बड़ा नहीं है, बट एवरी टाइम ब्रिंगिंग द ग्रोसरीज फ्रॉम देयर इज अ pain because you have to cross this road. Yes, this is genuine, this is there. Okay, this is there, very much there. Okay, acha, now let me come to another case. Okay, इनकन्वीनियंस की ही बात क्यों करें, कन्वीनियंस की बात करते हैं, राइट? Suppose you are owning a flat in an area in Mumbai called Worli, and this is a plush flat with sea facing views. I don't know what is stunning about sea facing views because always it is humid. Okay, but sea facing view is an attraction. Now tell me, when you are selling this asset, what are you going to advertise it as? A flat that is being sold, or will you say a flat with stunning views of the Arabian Sea is available for sale? आप बोलोगे ना by stunning views of the Arabian Sea? Yes or no?
Yes, sir.
That is adding value to your asset. So you have to consider that. You have to consider that. Okay. You are bound to consider it. Okay. So therefore, the question that is there is, do I need to consider asset-specific restrictions, asset-specific advantages? Answer is yes. One has to consider the restriction based on assumptions which normally would be taken into account by its market participants. Like, for example, whether the restriction is commonly imposed on each type of land, how useful it will be after 10 years, whether there are any alternative uses which may be considered normally by a participant, how liquid the sale of land will be with such restrictions, comparing the price with similar kind of land without restrictions to arrive at its fair value. Obviously, आप ऐसे consider करोगे? Yes. So that is what was the discussion on asset-specific restrictions, asset-specific advantages. Okay. Now we come on to the appropriate market, which we have already seen. Principal market, most advantageous market. The market, which is normally the place in which assets or liabilities are being transacted with highest volume, compared with high level of activities, compared with any other market available for similar transaction. If there is a principal market, the price must be used even if the price in the other markets are more advantageous. Why? Because this is the most liquid market. It will be the most representative input for a fair value measurement. हमने ये सब चीजें डिस्कस किया था. Okay, so just putting into perspective. Most advantageous market, this is the market which either maximizes the amount that would be received, net proceeds. What is net proceeds? Available price minus transport cost minus transaction cost. When an entity sells an asset or minimizes the amount to be paid while transferring the liability. I speak to you with the perspective of an asset, but obviously the same rules will apply for a liability also. In absence of principal market, this market is used for fair valuation of assets or liabilities. And in many cases, the principal market and the most advantageous market end up being the same. So example 7, you can go through this for homework. Example 8, diamond bores, you can go through this for homework. Okay, now When I talk about fair value, we come to the price finally. Fair value, price that would be received or paid to transfer a liability in an orderly transaction in the principal or most advantageous market at the measurement date under current market conditions, regardless of whether that price is directly observable or estimated using another valuation technique. So there are two new things which have come: directly observable, estimated using a valuation technique. ये दो चीजें we will look at it later. Directly observable, anyways, you know that. Okay. Fair value is nothing but available price minus transportation cost. Transaction cost, example, brokerage commission, are not a characteristic of the asset or a liability, but a characteristic of the transaction. Hence, do not consider transaction costs while assessing fair value. They would be considered while ascertaining net proceeds for determining the most advantageous market. We have seen this. Net realizable value क्या होगा? Fair value minus transaction cost. So that is your net proceeds ultimately. Transport cost, cost incurred to transport the asset from current location to its principal or most advantageous market. They arise from an event that does change a characteristic of an asset, that is its location, and hence it is deducted from available price to arrive at a fair value. Are you able to understand? Yes. Nothing new in what we have discussed. Okay. It's just a revision of what we have seen. Okay. So at this stage, we take a break. Yes, we take a break. We shall resume by around 8:55. Yes. And any doubts that you people are having so far?
Sir, not related to this standard, but the previous standard homework questions.
We can take it after today's class. I'll wind up by 10. Then maybe half an hour we can spend to see those questions. कौन सा standard का question है?
Sir, actually that question is from RTP May 22 that you gave to homework, question 17.
कौन सा? Ind AS 33 और 108?
108 वाला सर अभी की.
108 वाला ठीक है ना, देख लीजिए. I will look.
Sir,
Yes.
please upload these notes and previous lecture notes on the
जो
portal.
लिखा है ना, written.
Sir, actually ये वाला note भी available नहीं मिल रहा है.
That's what I normally do it by night. ठीक है, I will get it. Don't worry. Okay.
Okay, sir.
Okay, fine. So that's it. So we'll take a break. We shall resume. Okay. All. ठीक है. So this example you can do, just run through it for homework. Okay. All right. Now, there is this one question which is there. An asset is sold in two different active markets at different prices. An entity enters into transactions in both uh, in both the markets and can access the price in those markets for the asset at the measurement date. In market A, the price that would be received is 26, transaction cost is 3, and cost to transport the asset is 2. So market A, net proceeds 26 minus 3 minus 2. So 26 minus 5, 21. The price that would be received is 25 in market B. Net proceeds 25 minus 1 minus 2. So that comes to 22. You are required to calculate fair value of the asset if market A is the principal market. Market A is principal market. I will not even go to market B. So fair value of market A is going to be 26 minus transport cost of 2. So that is 24. Acha, if I have to look at the most, if none of the markets is principal market, we will look at the most advantageous market. The most advantageous market is B because that is maximizing the net proceeds. So fair value, if market B I go for, it will be 25 minus 2. That is 20. Any doubts here?
No, sir.
All right. So that takes care of question 1. Okay. All right. Now, one extra question. Isha Limited operates in the agricultural sector, and apart from farming activities, it also has a division retailing agricultural vehicles. It is currently evaluating a proposal involving sale of the retail division and accordingly wishes to fair value the inventory for the purpose of sale. 3 markets currently exist for the agricultural vehicles within which Isha has transacted regularly. Isha wishes to determine the fair value of 250 identical new vehicles as on 31st March 20x9. The volumes and prices across the 3 markets are as under. Market Uttar Pradesh, Punjab and Odisha, you have sales price, historical volume sold by Isha, total volume of vehicles sold in the market, transaction cost per vehicle, transportation cost to the market per vehicle. Isha wishes to value the vehicles at 3,91,000 as these are the highest net proceeds per vehicle. That is, it wants to take 4 lakh minus 5,000 minus 4,000. And Uttar Pradesh is the largest market for Isha Limited's vehicles. Isha Limited seeks your advice as to whether this valuation would be acceptable under Ind AS 113 fair value measurement. Okay, so tell me, what do you guys think? Read the question. Let us try to work out what is the what is the correct method of solving. You can also discuss and let me know. Okay. Yes. Hemant, Mamta, Monica. Is 3,91,000 acceptable? Pooja.
Yes, sir.
Okay, yeah, Iran, tell me. Yes. Is it
Uh,
acceptable?
Uttar Pradesh, the volume is high, so we can consider it primary market.
Okay. Okay. You mean the principal market. All right, fine. So therefore, according to you, the valuation is okay. All right. Next, what else do you think? What else? What others think? Monica?
Sir, sales volume in Punjab is highest. So we can
अच्छा,
put it.
तो ममता बोल रही है कि आप क्या कह रहे हो कि पंजाब में वॉल्यूम हाईएस्ट है. ओके, ऑल राइट. तो आपके हिसाब से फेयर वैल्यू क्या होगा? Remaining other students? बोलो यार. Okay, fine. See, first of all, we have to see the reason for valuation is given to you. They want to dispose of the division. So this is going under Ind AS 105. So therefore, we will have to do a fair valuation. So now when I'm doing the fair valuation, I will have to determine the principal market. Now, principal market, is it necessarily my market where I have the maximum sales, or is it where the market has maximum sales? What do you understand by principal market? Is it where the entity has maximum sales, or is it where the commodity is sold in maximum quantities?
Commodity sales in the maximum.
Is where commodity is sold in maximum quantities. So, me selling 10,000 vehicles in Uttar Pradesh is not relevant. What is relevant is the Punjab market is selling 9,35,000 compared to 1,75,000 and 1,45,000. Therefore, Punjab is the principal market because it is surpassing both the states by huge margins to show that the market in Punjab is evolved and the valuation that I get from there is definitely fair. So therefore, I will consider Punjab, I will not consider Uttar Pradesh. Now, when I have to do the fair value measurement, I will take the sale price 3,80,000 minus. Acha, now since I'm having the principal market, do I have to look for the most advantageous market?
No, sir.
नहीं चाहिए. So 3,80,000 minus transportation cost 7,000. Transaction cost is transaction specific. It is not entity specific. So 3,73,000. Are you able to understand? Yes.
Yes, sir.
Yes, sir.
Perfect. So 3,91,000, the contention of the company is not right because number one, the principal market has to be viewed from the perspective of the market participants and not from entities perspective. So from that perspective, Punjab is going to be the principal market. There is no need for me to look at the most advantageous market. Second is the fair value is determined as expected sales price minus the transportation cost. So 3,80,000 minus 7,000. So that gives me 3,73,000 per vehicle multiplied by how many vehicles are there? 250. So that will be the fair value of the vehicles. Okay. Any doubts? No doubts. So let us proceed further. Now we come to the next one, the next concept, that is valuation of non-financial assets. Non-financial assets. See, financial assets. क्या होते हैं आपके फाइनेंशियल एसेट्स? इन्वेस्टमेंट इन डिबेंचर्स, शेयर्स, bonds. Okay, all these are your financial assets. Financial assets is relatively easy to value. I'll tell you why. See, the standard is complex, but financial assets have, number one, either I am investing for capital appreciation, or I am investing for dividends and interest generation. Yes or no? Yes. Only these two things. When I say capital appreciation, it will obviously include your trading also. Okay, trading also. So can I say that the end use of a financial asset is very limited? Yes, is very limited.
Yes.
Interest, dividends or selling to get the benefit of capital appreciation. इसके अलावा आप और क्या ही कर सकते हो? कुछ नहीं कर सकते फाइनेंशियल एसेट्स के साथ. But if we look at non-financial assets, suppose I have a parcel of land, 200,000 square feet. अच्छा 200,000 छोड़ो, हम उसको बनाएंगे 10 acres का land है मेरे पास. Okay, suppose I have 10 acres of land. What can you do on that land? Suppose कोई restriction ही नहीं है उस land पे. You don't have any restrictions of any sort. तो आप क्या करोगे उस land पे?
Sir, anything could be mall, could be party hall, something else. like
कुछ भी कर सकते हो. You can
Yes.
leave it empty. मेरी मर्जी, मुझे कुछ नहीं करना है उस पर. यस, आप उस पर मॉल बना सकते हो. यू कैन डू एन अम्यूजमेंट पार्क. यू कैन कंस्ट्रक्ट अ पार्किंग लॉट एज शी सेड. आप उस पर स्कूल बना सकते हो, रेसिडेंशियल कॉम्प्लेक्स, कमर्शियल कॉम्प्लेक्स. यू कैन यूज इट एज अ डंपिंग ग्राउंड. यस, कि आके कचरा यू कैन पुट इट हियर एंड आई विल डू द ट्रीटमेंट ऑफ दैट. यस. Does it stop there? Does it stop there? I can use it as a helipad for all these people to land their helicopters if it is close to their offices. Yes, you can think of 1,000 things that can be done by land. That can be done by land. Acha. If I buy a car, what can I do? I can use it for self-drive, save on my petrol and time. I can use it as a taxi. I can go for a resale. और मैंने गाड़ी क्यों खरीदी? मुझे उसके पार्ट्स बेचने थे as scrap. So I can sell it off as scrap. Yes. Can I do any of these things? बोलो यार.
Yes, sir.
Yes, sir.
So my point of bringing this is that non-financial assets have multiple uses. Have multiple uses. Okay. So when we have multiple uses, अच्छा, land की बात करते हैं. Construction of a mall and construction of an amusement park. Will these have the same commercial value once they are constructed? Will the commercial value of this, whether it is an amusement park or whether it is a commercial complex, will the commercial value be the same?
No, sir.
नहीं होगा.
Uh,
नहीं होगा वो. Okay. If you construct a residential complex, if you leave it idle, if you leave it with parking lots, will it be the same? Answer is no. For each use of a non-financial asset, each different use of a non-financial asset, the value that you can generate is different. The value that you can generate is different. So now tell me, is valuation of non-financial asset easy? See,
no.
ultimately, I will have to look at what I can do on the land, because it's not entity specific, it is asset specific, and asset specific, no restrictions. On this land, you can do anything and everything that you want. And if I can do anything and everything that I want, are you able to understand the challenge? आप कितने uses estimate करोगे? How many uses are you going to estimate? And to assign a fair value for each of those uses. Is it practical to do? Is it practical to do? Answer is no. It's not practical. It's not expected also. It's not expected also. So now, when we look at the standard, it tells us that we must follow the highest and best use concept. Highest and best use concept. Now, when we talk about highest and best use, we must evaluate three parameters. First one is physically possible, legally permissible, and financially feasible. Okay, physically possible, legally permissible, and financially feasible. Now, when I talk about physically possible, on that parcel of land, are you actually able to construct an amusement park? Size could be a limitation, or what you can say, absence of water for water sports and all could be a limitation. So there could be many limitations. So it may not be physically possible. Or are you going to get permission for carrying on this activity? Is it legally permissible? Now, if it is legally permissible, fine. But suppose you have a commercial complex, you have land in a commercial area, and you want to build an amusement park there. Who will allow? Who is going to allow? Nobody is going to allow. Okay. And finally, is it financially feasible? All said and done, to do this activity, you need to spend money. And to spend this kind of money, is it financially a feasible option to carry out? Are you able to understand? So these three parameters form the boundary for restricting my usage of non-financial assets. अरे समझ में आ गया अपने को? Yes?
Yes, sir.
All right. Now, the highest and best use is determined from the market participant perspective. It does not matter whether the entity intends to use the asset differently. It does not matter whether the entity intends to use the asset differently. To find out the best possible use, one has to identify the market participants and then to find the best legitimate use of this non-financial asset, which one would normally do. All restrictions specific to any market participant, restrictions specific to a participant, would you consider? Answer is no, because that is not an asset specific restriction or a market specific restriction. It is a market participant specific restriction while finding out fair value of the non-financial asset. The last assumption that is there is, in absence of potential best use, which is not easily available, the current use would be considered as the best use. Obviously, because we assume that the entity is rational business-wise, there is it behaves rationally, and therefore, what it is doing currently will be assumed as the best use, While considering fair value under any alternative use, then deduct the estimated cost to be incurred in order to make the asset ready for alternative use. I gave you that example of demolition of the existing structure. So that becomes a characteristic change. So that has to be deducted from the expected sale proceeds. Are you able to understand? Yes, highest and best use concept.
Yes, sir.
समझ में आ गया ना? Yes. So now try this question for homework. We have discussed the example. Only for that reason I am pushing it on to you. Okay. All right. Now, let us look at this example 20. A Limited acquires a machine in a business combination by acquiring a controlling stake in B Limited. Machine will be held and used in A's operations. Machine was originally purchased by B from an outside vendor and before the business combination was customized by B Limited for use in its operations. However, the customization of the machine was not extensive. A determines that the asset would provide maximum value to market participants through its use in combination with other assets or with other assets and liabilities as installed or otherwise configured for use. There is no evidence to suggest that the current use of the machine is not its highest and best use. Therefore, the highest and best use of the machine is its current use in combination with other asset or with other assets and liabilities. Okay. So fairly simple, kuch naya nahi hai. Okay. Now go through this for homework. Okay. And then, all right, go through this also for homework. Okay. Determine the highest and best use. Okay. It's all examples what we have discussed. There is nothing new in this. I'm sure you will be able to do it. Will you try this out? Yes.
Yes, sir.
Okay. Please try karna. Don't leave it. Okay. It's just theory that you have to browse through. Okay. All right. Now, DS Limited is holding some land, some vacant land for which the use is not yet determined. For which the use is not yet determined. Now, the land is situated in a prominent area of the city where a lot of commercial complexes are coming up, and there is no legal restriction to convert the land into a commercial land. The company is not interested in developing the land to a commercial complex as it is not its business objective. Currently, the land has been let out as a parking lot for the commercial complexes around. The company has classified the above as investment property. It has approached you to obtain fair value of the land for the purposes of disclosure under Ind AS. On what basis will the land be fair valued under Ind AS? Yes. Read this and think about the answer. Yes. Any answers? Anyone? Bolo yaar.
Sir, land will be valued as per the commercial land, as land does not have any restriction.
Yes. So therefore, currently it is let out as a parking lot. But my restriction is that I am not interested in building a commercial complex. But is there a restriction on the land? Answer is no. So therefore, the best possible use that would be available would be as if it is being developed into a commercial complex. Is it okay? Yes. No other doubts. So that takes care of it. Anybody has any doubts till now? Please ask, because we are now moving into valuation techniques. Okay. Anybody has any doubts still here? Erin, Hemant, Mamta, Monica, Niranjan, Nisha,
Sir.
Neetu. Yeah, Nisha?
No doubt, sir.
Okay. Erin has confirmed. Hemant, no doubt. Nisha, also confirmed. Pooja, okay. All right. Mamta, okay, fine. So that takes care of non-financial assets. Okay. Financial assets is very simple. Okay. Financial assets is very simple. We will look at that a little later. Okay. Now, let us come to valuation techniques. Let us come to valuation techniques. The objective of using a valuation technique is to estimate the price, That is, quoted prices are not available in the principal or most advantageous market. Quoted prices not available in the principal or most advantageous market. To estimate the price at which an orderly transaction would take place between market participants at the measurement date under the current market conditions. An entity shall use valuation techniques that are appropriate in the circumstances for which sufficient data is available to measure the fair value, maximizing the use of relevant observable inputs and minimizing the use of unobservable inputs. Are you able to understand? Yes? Are you able to follow? Yeah. So what is the rule that is there here? The rule is I need to maximize the use of relevant observable inputs and minimize the use of unobservable inputs. Okay. मतलब क्या है इसका? What is the meaning of this? Okay. Now, suppose अच्छा. Suppose you are having an investment in shares of Maruti Suzuki. Okay. Suppose you are having investment in shares of Maruti Suzuki. Now, Maruti Suzuki shares are probably trading at 10,000 rupees. Let us just assume. Okay. So if you are required to find out the fair value of shares of Maruti Suzuki, what should you do? Is it a difficult task for you? No, all you have to do is you open the market price. Market price will show you what is the current traded price of Maruti Suzuki. That is your fair value of the shares of Maruti Suzuki. Yes or no? Any doubts here? No doubts. So therefore, tell me one thing. This valuation, is it objective or is it subjective? It is objective. Yes, it is objective. You are not applying any thought process to it. आपने 10,000 वैल्यू देखा, वो चिपका दिया यहाँ पे. You have just pulled out the value of 10,000 from the market and added here without any bias of your own. And therefore, this value ends up being known as fair. But will I always have such an ideal scenario? Answer is no. So what the standard tells is your intentions during fair value measurement should be to maximize observable inputs. Now suppose along with Maruti Suzuki, you are having investment in Volkswagen India. Now, Volkswagen India ka investment, do you think I can find it just like Maruti Suzuki? Answer is no, because Volkswagen India is not traded, is not listed, is not a listed entity. So therefore, if I have to do the valuation of Volkswagen India shares, how can I do it? How can I do it? If I have to do a valuation of Volkswagen India shares, कैसे करूंगा? Which one? Yeah, Nisha?
The net worth basis. Net worth basis.
So there are multiple ways. Number one, as you said, net worth basis. Number two, I can estimate what is going to be the cash flow in the future and do a DCF valuation, basically extending Gordon's formula. Third, I can definitely contact people in the sector, yes, and I will find out their fair values. So therefore, this is based on sectoral insights. Or last one is, can I look at the price value of Maruti Suzuki plus do some adjustments? Can I do it like this?
Yes, sir.
Yes. Can I do it like this? All right. Now, as an auditor, which valuation method would be easiest for us to be comfortable with? Would it be net worth basis? Would it be DCF basis? Would it be sectoral insights, or would it be Suzuki value plus adjustments?
Net worth and DCF, sir.
Which one?
Net worth and DCF.
Net worth and DCF. Okay, fine. What about the others? आपको क्या लगता है?
Last one, sir.
Last one.
Suzuki
Okay.
plus adjustment, sir.
Okay.
Because Suzuki share is listed and the price of that share is very genuine to rely on.
Acha, better to rely on. Better to rely on. Okay.
Better.
What about the others? Pooja? Jimmy?
What
Sir,
about contact?
Contact agents. Okay, I saw your message. Okay, all right. Pooja, बताइए.
it would also depend upon the facts and circumstances also, sir. If the determining prices using the comparative competitors' prices and making adjustment is preferable, then I would go there.
Okay. Okay. So let me tell you. See, when I look at net worth basis, normally, why do I prefer a net worth basis of valuation for shares? If I intend to acquire the entity and the entity is asset intensive. The entity is asset intensive. Okay. Generally, for going concern entities, net worth does not become a basis for valuation. Reason being, you are not just acquiring the assets. You are acquiring something more valuable, that is the people, the operations, the operational skills. That is what you are acquiring. And therefore, for a going concern entity, typically you would prefer something like a cash flow based methodology. So now you come to DCF basis. Acha, DCF basis, how many years projections can you give? Next 1 year, 2 year, 3 year, 5 years, 10 years? Okay. But tell me one thing, DCF basis, is it objective or is it subjective? What will it be?
Subjective, sir.
Highly subjective.
Lots of judgment involved.
There is a lot of bias which is involved. आप बोलोगे next year my sale will increase by 5%, but if I look at the trends of the past, it has increased only by 1%. How are you bringing additional 4%? Yes, you will show some cost reductions. You will show all fancy numbers in the future because it is highly subjective. And therefore, DCF is not adequate. Sectoral insights, by meeting your agents, brokers, etc., they can give, but again, it's not adequate. It continues to remain subjective because sectoral insights are again based on opinions, So coming to existing value plus certain adjustments. Okay. Suzuki's market price, is it what you call Suzuki's market price, is it objective or subjective? Sir, it is objective. खाली देखना रहता है. Okay. Now, there could be some adjustments to that. Sir, adjustments like number one, the first adjustment could be the fact that Suzuki's shares are traded, but my shares are not traded. So therefore, you could assign a liquidity discount. Yes?
Yes, sir.
Yes or no? So you could assign a liquidity discount. Okay,
Yes,
that
sir.
much will be the higher value of the shares. That much will be the lower value of the shares because your shares in Volkswagen India are not liquid. You cannot sell them to anybody else. Okay, you cannot sell them to anybody else. Is it okay? Yes. Now, apart from this, there could be certain other adjustments. There could be certain other adjustments like, for instance, in the Volkswagen vehicles, your R&D forms a major chunk. Yes, so those also you could factor in. Yes, those also you could factor in. So based on all this, your comfort is maximized here. Your comfort is maximized here. Why? Because I have a benchmark. To that benchmark, all I'm doing is doing some certain adjustments. I'm doing some certain adjustments. Are we able to follow? Yes.
Yes.
Will these adjustments be very significant? Answer is not necessarily. Not necessarily. Okay. So when you call it as will these adjustments be significant? Will these adjustments be significant? The question is, what do you mean by adjustments becoming significant? Will it be some major percentage of the market price? Answer is not possible. Not possible. Okay. So therefore, your comfort is maximized when you go for Suzuki plus certain adjustments. Any doubts here? Any doubts?
No doubt, sir.
Okay. Nisha, you want to add in something?
I want to know doubt.
Okay, fine. So that takes care of the first one. That takes care of, because Suzuki is a traded entity. Okay, Suzuki is a traded entity. Today, Hyundai also is a traded entity. So you can easily take their value and then do adjustments for your purposes. Okay. Yes. So let's proceed further. So inputs to valuation techniques, I have observable inputs and I have unobservable inputs. Observable inputs based on market data obtained from independent sources, and unobservable inputs based on entities' own assumptions about financial failure, projected future cash flows. Is it okay? Yes. All right. Next. Inputs to valuation techniques, fair value hierarchy. I have three categories. Level 1 inputs. These are quoted prices unadjusted in advised markets for identical assets or liabilities that the entity can access at the measurement date. Example, quoted prices of equity shares on BSE, NSE, gold price of gold head as quoted price of gold held as an investment. So all these things, can I say I have a defined market for that? Shares and gold, do I have a defined market? Yes. And
Yes.
when I have a defined market, why should I break my head on fair valuation? Yes or no?
Yes, sir.
So therefore, I will prefer to go for level 1 inputs always. So when are you going to do the fair valuation? Whenever you are going to do the fair valuation, you will look at level 1. You will look at level 1 inputs. Is it okay? Yes, is it okay? All right.
Yes, sir.
Now we come on to level 2 inputs. What is level 2 inputs? Directly visible to nahi hai, but you can look at level 1 inputs and then make certain adjustments. Like inputs other than quoted prices included within level 1 that are observable for the asset or liability directly or indirectly. These inputs include quoted prices for similar assets or liabilities requiring certain adjustments. Example, entity holding 21 karat gold, whereas price of 24 karat gold is only available. Are you okay? Yes. So we start off with something that is readily available in the market, and then we will be doing certain adjustments. Is it okay? Yes. This is basically the Volkswagen Hyundai example that I gave earlier. Okay. All clear?
Yes, sir.
All right. Last one is level 3 inputs. Level 3 inputs, unobservable inputs for asset or liability, which shall reflect the assumptions that market participants would use when pricing the asset or the liability, including assumptions about cash risk, example, financial forecast, historical volatility, requirement for valuing options under the Black-Scholes model. Is it okay? Yes. Is it okay? Anybody has any doubt so far? Yes?
No.
No doubts. So, always our intention should be to look at subjective valuations, level 1 inputs. Level 1 nahi mila, then you move to level 2, and finally you move to level 3. Okay?
Sir, can you please explain again this unobservable inputs?
Unobservable inputs means, take a case like discounted cash flow method. In discounted cash flow method, what am I doing? I am basically evaluating the future cash flows. Do you agree? Yes? Hemant, do you agree? Hemant, na it was? Yeah. So when I'm evaluating the future cash flows, what am I benchmarking it against? For all that I know, the entity may give a cock and bull story that I'm supposed to agree because it has come from the management. Because it has come from the management. Are you able to understand? Yes. So that becomes your unobservable input because this is subjective. I don't look at somebody and do it. Whereas objective is what? You have the what you say observable means you have the input, you just have to plug it into your fair value. You just have to plug it in your fair value. Is it okay? Yes. Is it okay? All right. So that takes care of this. Okay. So now I leave this question for homework. Please do that. Okay. All right. Fine. Okay. Next. Valuation adjustments. Okay, I think what we can do is this valuation techniques and all, we can pull it up in the next session. Okay, anyways, half I have already covered. So I think that yields a lot of things. So my advice is try this as your homework. Yes, try this as your homework. You should be in a position to answer it. Okay. Can you do these questions for homework? कुछ नहीं, खाली some examples are there. You just have to read that and come out. Is it okay?
Yes, sir.
Sir.
हाँ, बताइए. So please try this out. Otherwise, yeah, half of the chapter is already done. Okay, so you can look at the remaining half in the next session. I think we are fairly comfortable on closing this particular point. Okay, all right. Now, yes. So there were some queries relating to Ind AS 33. Question number 17. Which one you were saying? Pooja?
सर 108 का था,
अच्छा,
आरटीपी में 22 का.
108. Okay. Yesterday only we had solved it, na?
सर आंसर को गो थ्रू किया था बट नॉट इन डिटेल, जस्ट ऊपर ऊपर से आपने बताया था क्या करना है.
Okay. तो आपने किया?
जी मैंने सॉल्व किया सर, आंसर भी मैच हो रहा है, बस एक चीज पे आके अटक गई हूँ। जैसे रिपोर्टेबल सेगमेंट में हम देखते हैं कि अगर एक्सटर्नल रेवेन्यू रिपोर्टेड जो हो रहा है अगर वो 75% से कम होता है तो हम एडिशनल रिपोर्टिंग सेगमेंट्स उसमें ऐड करते हैं।
यस यस
बट क्वेश्चन डेटा जो हमें गिवन था उस हिसाब से अगर हम सारे अगर सेगमेंट्स को रिपोर्टेड सेगमेंट भी कर लेंगे तो भी 75% ऑफ रेवेन्यू नहीं हो रहा था सर।
एक्सटर्नल रेवेन्यू कितना है? Let me check.
एक्सटर्नल रेवेन्यू जो है वो 405 है,
Let
और
me
75 देखते हैं, वो एक्सटर्नल रेवेन्यू का 75 देखते हैं या फिर टोटल रेवेन्यू का 75?
external. You have to look at external. Okay. So let me just run through it. Batch 9 108. Okay. RTP question. ना? ये वाला क्वेश्चन ना?
हाँ जी जी
Okay.
जी।
अच्छा so हाँ जी बताइए। One minute. 255 plus 15 plus 10, 1550, 25, 35. So external revenue comes to
40।
405. So 405 into 0.75. Your revenue reported should be at least 303.75. Did you understand?
Yes sir, I was taking 75% of total revenue, that's
No,
why I was confused.
totally. If you look at the wordings in the standard, what does it say? If total external revenue reported by operating segments is less than 75%, additional operating segments should be identified as reportable even if they do not meet 10% thresholds, unless at least 75% of entities' revenue is included in the
हाँ,
reportable.
ये last line थी ना सर, 75% of entities revenue is included, that's why I was taking that total sense.
You will have to take it as external. Okay?
Okay sir.
Then I think you should be able to get it right.
Yes sir.
ठीक है. Anything else? Any other query? Anybody else? Any other standard? No other queries? Okay, fine. One second. Let me see this. If anything is there for me to discuss.
सर
Yes.
हम लोगों को आज तो नहीं है कोई क्वेरी, अगर हम रिवाइज करते हैं और तब उस स्टेज पर कोई क्वेरी आती है देन हम कैसे आपसे कांटेक्ट करके उसको कुछ सॉल्व कर सकते हैं?
There is one email ID where you can reach out. एक ईमेल आईडी है।
तो कैन यू शेयर विथ अस?
हाँ हाँ हाँ, एक मिनट मुझे ढूंढने दो पहले, वो क्या कौन सा मेल आईडी है इंस्टीट्यूट का। एक सेकंड, आई एम जस्ट सर्चिंग दैट। फाइनल FR
सर ये FR-final@ICAI?
यस 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 वही है। आई वाज वंडरिंग FR डॉट है कि FR अंडरस्कोर है।
FR- है डैश।
dash. So that is the one. So you can reach out at fr-final@icai.in. Okay. So you can reach out to this. आपके जो भी queries हैं, you can post it here and they get resolved. Okay, it reaches us, so we can help you out on this. Okay.
सर बट ये तो सिर्फ ईमेल में ही रिप्लाई आएगा, दैट्स द पॉइंट कि हम लोगों को अगर कोई कन्वर्सेशन करके कुछ सॉल्व करना है तो दैट
I think that we'll discuss with madam and let you know. Okay. अगर कोई conversation या you want to have certain additional discussions, maybe that I think the institute can see something. I'm not sure. Okay. Because
Sir,
normally, yes, madam.
सर
Here,
HFM में
sorry, because since you are asking for conversation, if you have lots of queries, just mail me at fr-final@ici.in and we'll try to arrange a doubt session. If your queries are something which is not resolved through mail, you first mail your queries. We'll try to reply you and satisfy you. In case you're not satisfied, you still want some, we'll try to arrange one doubt session. Okay?
Because
थैंक
at least
थैंक यू मैम.
based on past experience, we have seen email say things get resolved quite satisfactorily. That is at least what I have seen. So anyways, you can always reach out. So this is the query. Anything else that you have? Any doubts in today's class?
नो सर, थैंक
No doubts.
सर कोई
Okay.
डाउट तो नहीं है, बट जो लास्ट Ind AS 108 and these Ind AS
I'll give.
actually notes are not uploaded, so
I'll give. I'll
homework
give.
question में थोड़ा
I'll give. I'll give. I'll give. Okay. I think today you
सर
should.
ऑल्सो अपलोड हैंड रिटन नोट्स.
Yes, yes. Handwritten तो class के बाद ही होता है. Normally I accumulate because I cannot upload
सर
it.
108 तो क्लास के बाद हो गया ना.
108 दे देंगे आपको. Yes, आज दे देंगे.
सर 108 का एनोटेड अपलोड कीजिएगा प्लीज.
ठीक है, दोनों चीजें मिल जाएंगे आपको आज. Okay.
थैंक यू सर.
All right. So that's it from my side. Anything else?
सर
Yes.
लेक्चर जो हमारा कल का था वो एक्चुअली यूट्यूब के प्लेलिस्ट में नहीं दिखाई दे रहा है सर हमारा.
Playlist दिखाई नहीं दे रहा है.
जी यूट्यूब के प्लेलिस्ट में कल वाला लेक्चर नहीं दिख रहा है. लास्ट लेक्चर 5 का है. 5 दिसंबर का लास्ट अपडेटेड लेक्चर्स दिख रहे हैं लिस्ट में.
Check that.
उसके लिए ना उसके लिए ये मतलब इंस्टीट्यूट के वेबसाइट पे जाके वो लेक्चर स्टार्ट करोगे और नीचे यूट्यूब का ऑप्शन आता है, वहां से जाके अपने लेक्चर्स में ऐड कर सकते हो.
Okay, fine. Help one another. Okay. All right. So ठीक है. I mean that's a little technical. I'm not very sure वो क्यों नहीं दिख रहा है. Okay. But it should be there. It should be there. Okay. All right. आप YouTube की बात कर रहे हो या फिर इंस्टीट्यूट के पोर्टल की?
भी ये लेक्चर अपलोडेड है सर, बट प्लेलिस्ट में ऐड नहीं है लेक्चर.
ओके ओके ओके. ठीक है. All right. So that's okay. I mean that is something we'll have to check. All right.
We'll do that. We'll add it in the playlist. No?
Okay. All right. So go through whatever we have done so far, and I think you will be comfortable to take over the next part. Next part of the session will be little bit of more problem solving on fair value measurement, where we will look at application of valuation techniques, and we will also be looking at certain valuation principles related to liabilities and equity, because till now whatever we have discussed has been from the perspective of an asset, and asset ke case mein you people will be fairly comfortable. You will be fairly comfortable because kya hota hai, you are able to visualize an asset getting sold. But when we come to a liability or an equity, that is not something which is very common, but I think we should be able to handle that. It's a very brief discussion that we'll be having. But yeah, most of the remaining part of the chapter will be having physical questions to solve. So I think a lot of our questions or queries will get ironed out in that. Okay. All right. So thanks everyone, and see you guys on Tuesday morning. Okay.
थैंक यू सर.
Yes.
Thank you so much, sir.
Thank you. Thank you. Thanks everyone. Good day. Thank you. Yes, yes. Complete.